Welcome back. You're watching the ET Money Show with me, Kavita Thapliyal, and now with me is Anand Rathi Private Wealth Management Deputy CEO Feroz Aziz. Feroz, good evening and welcome to the show. We'll be talking on various aspects of financial planning, but then before that, let's take a viewer query first because we have a lot of them who want, viewers just want them to be answered by you specifically. So I'll be taking Namisha's query first, and she says that she's doing a monthly SIP of 1,500 in Franklin India Blue Chip, HDFC Flexi Cap, Kotak Emerging Equity, and she wants to understand if these funds are right for her and her time horizon is long term.
Yes, I think Namisha's three schemes are good. All the three are a part of our model portfolio. It's quite evident that she would have picked up looking at your show, Kavita. So Franklin India Blue Chip, which is managed by Venki, who's done okay. He got out of the PSU sector sooner and moved to IT sector, which has resulted in a 4-5% underperformance to Nifty over the last 1 year after Roshi Jain quit being the fund manager for the scheme in September 2021 and moved on to manage HDFC Flexi Cap. So there's a change, and she also incidentally has HDFC Flexi Cap, and Roshi has performed brilliantly well from June, July when Prashant moved out. So HDFC Flexi Cap has outperformed by about 11%. Kotak Emerging Equity is a mid-cap scheme which has done well. It's outperformed Nifty by about 4-5% and also outperformed the scheme benchmark. So net, I think, Namisha, you should give some more time to Franklin India Blue Chip. All these schemes are good. Three schemes are good. Since you've picked up schemes from our model portfolio, you would have at least outperformed the Nifty by about 4% over the last 1 year, including these three schemes. So it's great. Please continue this. I think Franklin Blue Chip should turn around looking at its future prospect.
So that's the recommendation for Namisha. And also, why is it important for her to have a proper defined goal? Because so far, although she started her investments and you've recommended funds to her, she should also be aligning her investment to her goals, right?
Yes, Kavita. So I think as a first step, quite a few people don't establish goals. It's good to actually start with a goal because it's like the destination should decide the journey rather than the journey deciding the end. You always in Google Map first enter your destination, not like you just go out, start driving and then decide what destination you're going to go to. So its goal always brings in discipline, commitment to the saving, and some degree of input towards asset allocation. All that can be derived out of goal-based investing. It's always good, but I also say that if you've at least started swimming and dipped your feet into water, it's not too late to now re-establish goals. Spend a weekend, write your goals down, write their times down, write their inflations down, write down their future values, and work backwards saying that what's the amount you need to save so that these goals just don't remain in the air and you're able to fulfill these aspirations. So very valid, Kavita. I couldn't agree with you more. And that Namisha can now at least, it's better late than never, to have a goal and sail with a compass than without it.
All right, we move on to Lokesh's question. And Feroz, he says that he's been investing 10,000 as per SIP in SBI, a small cap fund, and he wants to have a corpus of 5 crores in 20 years. And just this one fund for this corpus, is it enough?
See, I think, Kavita, this is what quite a few of our viewers also write in, and they forget to create the core and then look at the satellite. It's like not putting the foundation and worrying about constructing the 20th floor of a building. So small cap are risky, but they can't be your core part. Core part has to be flexi cap, multi cap, even a large cap scheme, which has a reasonable portion in the top 100 companies as per free float market cap of India. Now, let me tell you why I would say small cap is not a great strategy. Out of the last 5 years, 3 years have been negative for small cap, and Nifty has not been negative in any of these 3 calendar years. It clearly implies that small cap is a long-term investing, which can give you a fillip to your portfolio rather than give you the core return. Now, mid caps have been negative for 2 years out of the last 5, and large caps or Nifty as a proxy for large cap has not lost money in any of the calendar years over the last 5 years. So please, and you have not a 1,000 rupee, you have 10,000 rupees, which implies that you have enough appetite to have top 5 AMCs in the portfolio, top 5 categories in the portfolio. And that's why I would say, if you really like SBI, then you can look at SBI large and mid cap, which I think is a small scheme, but definitely one of the favorite schemes of the CIO himself. So that's one good addition if you have some degree of affinity towards SBI. But add these, HDFC Flexi Cap, ICICI Focused Equity, Kotak Emerging Equities into your portfolio because you have 10,000 rupees and the minimum amounts are as low as 500. So your affordability is 20 schemes, but you don't have to go there, but at least have 4 or 5 of them.
So, Feroz, but then how realistic is this goal? I mean, obviously, one needs to have more funds in their portfolio, which are recommended by you, but then an SIP of 10,000. Obviously, Lokesh can start with whatever he's comfortable with right now, but then clearly, is it enough? Because you're talking about 5 crores in 20 years. He needs to increase his investment amount?
Yes, Kavita, he will have to increase. His goal with 10,000 rupees, he can get to 5 crores in 30 years at 14-15%. But to do that in 20 years, you will have to do a step-up SIP. A 10% step-up can help you reduce the tenure from 30 down to 20. So step it up by 10% every year. Lokesh, if you can't afford to increase it at this juncture, there's no hope lost. But move it up 10%. So next year you go to 11,000, the subsequent year you go to 12,100 and so on and so forth. That will help you reach the target even at 14-15% compounded return, which I think is a fair return for a economy which of our size, which is growing at a nominal rate of 11-12%.
He needs to be flexible with his tenure, 20 years. Maybe if he makes it 25 years, it'll be comfortable for him right now.
Yes, he can look at 25 years, but I think it's more important to make a stretch on the amount of investment because it's like you get into a comfort zone when you just increase the period. But I would rather push a person to increase his amounts, and if that's still not met, then you have to provision for a couple of years this way or that way, depending on how God is kind to you and all of us over the next 20 years. But Kavita, yes, it will require some stretch in the period as well.
We move on to Mamta Banu's question, and she says that she needs 27 lakh plus for her son's MBA's education, and she says that she's having 12 lakh from mutual fund from her SIP investment of 8 lakhs over 7 years. Now she wants to understand how can she withdraw this to pay fees installment to minimize capital gain tax cut.
You see, Mamta, if you're looking at investments of equity, you automatically are in the most tax efficient capital gain asset class. And of course, you've finished your 1 year period for most of the installments, if not all of them. So you're going to be taxed at 10%. If this is all in one file, you are going to be taxed for beyond 1 lakh of capital gain. You have a 4 lakh capital gain. If you have a family of 4 people, you can give these units to different files and then use the 1 lakh limit of exemption per financial year. So one is you have a 4 lakh capital gain. You have 2 financial years coming. We are almost at the fag end of the financial year. So withdraw enough amount to not have more than 1 lakh rupee capital gain booked in this financial year. You can on 1st of April book another portion which can result in 1 more lakh of capital gain. If you can gift it to your child, if he is not a minor, clubbing provisions will not be applicable, and then you can use both these files to have all your 4 lakhs of capital gain tax exempt.
Which also means that you need to see the time duration of each investment, Feroz, and if it's an SIP, you've got to consider the duration of each SIP, each installment.
Yes, Kavita. So if she's invested for 7 consecutive years consistently, that implies that 6 into 12, that's close to 72 installments would be tax exempt or long-term capital gain. They're not tax exempt. There would be 12 installments invested in the last 1 year, which have not finished the exit load period, nor have they slipped into the long-term capital gain category. So you, when we speak of your 12 lakhs, so we have to look at those units accumulated, like Kavita rightly pointed out.
So, Feroz, I might just have to cut you here because we have an important thing happening. Axis Bank reported its Q3 results a while ago. While the bank's asset quality and PAT came in line with estimates, the net interest margin or NII came above estimates. Let's listen into the bank's management, which is addressing the press con call.
Rated banking app in the world. We stay on course on 3 core areas of execution of our GPS strategy, namely embedding a performance-driven culture, strengthening the core, and building for the future. Let me now discuss each one of them in further detail. Performance-driven culture, we continue to improve our profitability matrix. Our consolidated annualized ROE for Q3 financial year 23 stood at 19.81%. While Puneet will provide granular details, let me highlight the key trends. Net interest margin improved 73 basis points year-on-year and 30 basis points quarter-on-quarter to 4.26% in quarter 3 financial year 23, which is a lifetime high. Operating profit grew by 20% quarter-on-quarter and 51% year-on-year, highest in last 13 quarters. OPEX growth of 8% in quarter 3 further moderated from 14% in quarter 2 on a year-to-year basis. PAT at rupees 5853 crores was up 62% year-on-year and 10% quarter-on-quarter. Second part was lifting the growth trajectory and consistently gaining market share. Our customer acquisition remains strong. In quarter 3, we added 2.9 million new customer accounts, a growth of 34% year-on-year and 3% quarter-on-quarter. The growth in our granular deposits continues with average CASA balances up 10% year-on-year and 4% quarter-on-quarter. Our liability strategy driven through premiumization, granularization and deepening remains on track, reflected in 140 basis points year-on-year improvement in share of premium segment. During the quarter, we crossed the milestone of 3 million cards in force for Flipkart Axis Bank credit card, making it one of the fastest growing co-branded credit cards in the country. In quarter 3, we continue to witness strong momentum across our focused MSME segment, which continues to remain a key growth driver for the bank. The mid-corporate book grew 42% year-on-year and 11% quarter-on-quarter. The SME book grew 24% year-on-year and 5% quarter-on-quarter. The SBB segment delivered strong growth of 60% year-on-year and 8% quarter-on-quarter. The combined portfolio of these three segments grew 35% year-on-year and now constitute 22% of the loan book, up 510 basis points in last 8 quarters. Retail loans grew 17% year-on-year and 1% quarter-on-quarter. Unsecured personal loans and credit card advances grew faster at 21% and 39% year-on-year, respectively. We are seeing a broad-based growth in corporate loan demand. There is strong activity in segments like renewables, roads, chemicals, urban energy distribution, commercial real estate, and healthcare. Capacity expansion projects are picking up, especially in consumption-driven sectors. Pricing has seen improvement compared to what we were seeing 2 to 3 quarters back. We continue to choose opportunities that meet our return threshold.
All right, so that was a con call which was underway, but then let's again connect back with Feroz. So Feroz, we were talking about our viewer, Mamta Banu, whom you guided how to minimize the impact of capital gains tax. But then we have one more viewer whose question is in line, which is Rathore D. And he wants to understand that whether he can have a mutual fund strategy to invest for medium to long-term perspective. The target is to have a corpus of 10 crores in next 20 to 25 years. Do you think this goal is achievable through mutual funds?
Yes, Kavita, it's certainly achievable with a mutual fund as a platform to express your bullishness of your long-only positions. You can participate in equity directly through PMSs, through mutual funds, through AIFs. You can buy NPS. I think mutual fund is one of the most transparent and flexible methods to participate in equity. From a cost perspective, from a regulation perspective, from a tax standpoint, it fares on everything. That's why I'd say that it's a great platform to choose, Mr. Rathore. Point one. I think your ask is also reasonable, because you're wanting to have a 10 crore corpus. So I can work backwards and tell you what kind of SIP amounts you will need at the rate of 14%, which is what you should expect, not more than that. If God is kind, you get 16. That's great, but you can't provision for anything, or at least plan for anything greater than 14. History has meant 16, 17% as well. At 14%, if I work backwards, 25 years, 10 crores will need 37,000 rupees per month of an SIP amount. For you to be able to pre-tax get 10 crores after 25 years. And if you have that kind of corpus, you have the flexibility to spread it across different categories and different AMCs to get different styles in your portfolio and different market segments into your portfolio. So I'll read out some scheme names for you, which you can surely consider in your portfolio. HDFC FlexiCap, ICICI Focused Equity, DSP Equity Opportunities, SBI Contra Kotak Emerging Equities, and lastly, an Aditya Birla Small Cap Fund. These 6 schemes from 6 different AMCs with 6 different categories could be a reasonably diversified relatively lower risk portfolio.
Approximate investment amount would be how much for 10 crores corpus in 20-25 years? Can he start small?
If he has to start with the amount which he keeps constant for 25 years, it has to be 37,500. If he's wanting to do a 10% step up, then he can even start with the 16,000 rupees. And if he does a 10% step up every single year for 25 years, he'll anyways get there.
All right, Feroz, that will be all with you. Thank you so much for being on the show. And